At a time where inflation is still near record highs and the Federal Reserve Bank is scrambling to bring inflation down, Elon Musk and Cathie Wood have pivoted on their opinions, and they're saying that the Federal Reserve Bank needs to stop raising interest rates. They need to stop fighting inflation, because if they don't, the Federal Reserve Bank will start creating deflation. Inflation is when the price of things go up because the value of your dollars is dropping, and deflation is when the price of things go down because the value of your dollar is going up. And just like how inflation is good for some people and bad for others, deflation is good for some people and bad for others. Like, deflation is good for regular people because when you have deflation, now your savings and your salary can stretch further. You can buy more stuff with the savings and salary that you have. But deflation is bad news for people who have debt, and it's bad news for business owners, because now if you have deflation and you have debt, now you're paying off your debt with more valuable dollars. And if you're a business owner or an investor, deflation is also not good news, because that means that your company now has to sell their products at a lower price, meaning smaller profit margins, which hurts businesses. Now let's talk about how we got to this situation, because on January 25th, 2022, the Federal Reserve Bank came out and they said that there's nothing to worry about. Yes, inflation is a little bit higher than expected, but it's completely under control. There's nothing for you to worry about. The Federal Reserve Bank has everything secured and safe, and so they wanted to keep interest rates at zero, and they said that they would start raising interest rates and that they would start fighting inflation sometime in the future, because it's no problem right now. Then on March 15th, 2022, the Federal Reserve Bank made their first interest rate hike in years, when they raised interest rates by 0.5%. And they said that the reason why that they're willing to raise interest rates is that not only our economy is strong, but our economy is continuing to get stronger, so they don't expect interest rate hikes to hurt the economy. And this was their first interest rate hike, and they said that this would now start bringing down inflation. On May 3rd, 2022, the Federal Reserve Bank said that the economy is still robust, it's still growing, but you can expect 0.5% hikes throughout the year. They raise interest rates by another 0.5%, and that these 0.5% hikes will be more than sufficient to bring inflation down, and that you don't really need to worry about the economy slowing down, because our economy is so strong and so robust. On June 15th, 2022, the Federal Reserve Bank cranked it up a little bit, because they said, okay, inflation is hotter than expected. It's not coming down as fast as we would like, so now we're going to raise interest rates by 0.75%. Don't expect more 0.75% hikes. This is just a one-time thing, because we really need to cool inflation down. And they said that their economy is so robust, it's so strong, that it will be able to withstand these higher interest rate hikes. By the way, all this data and analysis that I'm giving you is from the Federal Reserve Bank themselves. I went to their website and I read their actual reports. That's where all this data is from, in case you wanted to go and read it for yourself. Then, on July 26th, 2022, that's when the Federal Reserve Bank started to change their tone on the economy a little bit. In July 26th, the Federal Reserve Bank said that now our economy is starting to soften a little bit. However, our economy is still very strong. Our economy is still robust. Job growth is still there, but inflation is still way higher than expected. So now they raised interest rates again by 0.75%. And now they're saying, you know what? You might need to expect another 0.75% hike if inflation continues to stay strong. Then on September 21st, 2022, the Federal Reserve Bank said that you can expect pain ahead. They said that they were going to raise interest rates again by 0.75%, and they said that they're going to continue to raise interest rates aggressively in order to bring inflation down. And they said that this inflation fight is now going to induce pain. It will slow down the economy, and now you can start to see a different picture of what they were saying in September compared to what they were saying in January, February, March, April, and May. The Federal Reserve Bank is going to host their next meeting on November 1st and 2nd, which is when they're going to give their next projection and interest rate announcement. However, prior to that, this is where now Elon Musk and Cathie Wood have started to sound the alarm, saying the Federal Reserve Bank needs to stop raising interest rates because they're going to hurt the economy, and this pain to the economy is going to cause deflation, and that's going to be bad for businesses, it's going to be bad for people, it's going to be bad for the government. But this is where you also have to understand what the Federal Reserve Bank is saying themselves, because around this time, after the September hike, I had a lot of people saying that the Federal Reserve Bank is going to change course, that there's no way that interest rates are going to continue to stay high. Mortgage rates are way too high. We're already seeing the housing market slow down. We're already seeing the economy slow down. That in 2023, the Fed is going to cut interest rates and we're going to see interest rates, mortgage rates all fall in 2023. Well, in the beginning part of October, before their November meeting, the Fed came out and said, whoa, 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 not so fast. We don't plan on cutting interest rates. In fact, we plan on raising interest rates and keeping them high through 2023. Now, will they hold true to what they're saying? I don't know. But they came out and made this statement because you had people in the markets betting that the Federal Reserve Bank is going to start inflating the markets, that they were going to start cutting interest rates in 2023. And they're saying, don't expect that to happen. Now look, I'm not in the business of trying to predict what the Federal Reserve Bank is going to do because that's gambling. And I'm not in the business of trying to fight the Federal Reserve Bank because that's going to be a very painful fight. They can print as much money as they want on command. Instead, I'm in the business of understanding what the Federal Reserve Bank is going to do. That way I can allocate my money smartly instead of just throwing my money around blindly. Now, the best way for you to stay up to date on what's happening would be to actually read what the Federal Reserve Bank says, read the reports, read the raw data. That way you can make smart analysis for yourself. If you're not willing to or not interested in spending the time of actually reading the reports and listening to what they're saying, not just the headlines, but the actual reports, then the next best thing would be for you to join something like Market Briefs, which is my free financial newsletter that I created. It's a way for you to stay up to date on what's happening in the inflation, stock market, real estate market, cryptocurrency, and global economy into a fun, easy to read, and witty newsletter. I promise you, you are going to love reading Market Briefs in the morning. And if you haven't joined Market Briefs yet, what are you waiting for? It's free. So if you want to join Market Briefs for free, I'll put the link to how you can join down in the description below. So Cathie Wood is the famous investor in the ARK funds, and she tweeted this. In response to Elon Musk tweeting that a major Fed rate hike risks deflation, Cathie Wood said that deflation is in the pipeline, heading for the PPI, CPI, PCE. These are all just inflation indexes. And she's saying that from the peak of COVID, we have seen the price of a lot of things like lumber, copper, oil, and iron ore fall. And then Elon Musk responded to Cathie Wood's thread of tweets by saying, exactly, this is neither subtle nor secret. So you have the Federal Reserve Bank here saying, expect more pain ahead. We're going to continue to raise interest rates. We don't care if it's going to crash the stock market. We don't care if it's going to crash the real estate market. We don't care if it's going to crash the economy. That's what they're saying right now, that they're going to continue to raise interest rates to bring inflation down. Now you have Cathie Wood and Elon Musk saying, you got to stop with the interest rate hikes because you're going to cause deflation. You're going to cause a recession. You're going to cause a lot of pain. And these things need to be stopped by the Federal Reserve Bank. Now, you got to understand people's intentions because if you have money in the markets, you want a cut in interest rates because that's going to cause inflation, it's going to cause a boom, and it's going to cause your assets to go up, of course. Now, if you have money on the sideline and you want to put money in the market, it's more beneficial for you to see interest rates go up because that's going to hurt asset prices and create a better buying opportunity for you. This is just from the aspect of your money. Now, if we talk about it from an economic perspective, of course, you want inflation to come down. Of course, you want to see a reset. You want to see things get actually taken care of instead of just putting a little staple or a little band-aid on the problem, because this bubble is going to continue to get bigger if we just keep inflating and inflating and inflating. It is very important to bring inflation down. That way you can save the health of our economy, but also save the health of our dollar. But if we focus in on Cathie Wood and Elon Musk's perspective, they are in charge of either investing in or creating startups. And these startups are many times very heavy on debt, which means that they use outside money to grow. Many of these startups don't have a profit because if you make a profit, that's looked at as bad in the eyes of investors, because if you have a profit, that means you have cash in the bank that's not being invested, that's not being used, so you're not growing as quick as possible, as fast as possible. So for these startups, it is very advantageous to go into as much debt as possible, to raise as much investment dollars as possible. That way you can grow big and fast. You don't want to have a profit because that's dead money sitting in your bank account. You want to invest every dollar that you have back into yourself. Now, if you remember what I said in the beginning part of this video, who does deflation hurt and benefit? Well, deflation hurts people who have debt. Because now when you have debt, you have all this money that you owe, but now the value of your dollars are getting more expensive, which means you owe this money with more expensive dollars. Meaning your debt becomes more expensive when you have deflation. You can think of it just like when inflation happens. If you borrow $500,000 to buy a home, and then the home value goes up to $1 million because you have inflation and your salary goes up significantly, your salary doubles, well, your mortgage payment isn't going to feel as painful because you've had more inflation and your debt is fixed. But if you have deflation, you have this $500,000 mortgage, but now your home price goes down to $250,000. Now it's much more painful, much more expensive to pay back your mortgage, especially if your salary gets cut in half as well. That's what these business owners fear, is this type of deflation, because now you're going to have to pay more money, more dollars, more valuable dollars to pay down your debt. Plus, I should also mention that Cathie Wood and Elon Musk have a little bit of a different opinion of what causes deflation, because Cathie Wood has said pretty publicly that in her eyes, deflation can happen naturally through innovation. Because if you invest in innovation, even if that causes inflation, that will eventually cause deflation, because innovation and technology will cause the price of things to go down. Technology will improve supply chain issues, it will improve the way that we produce things, it will improve the way that we create our products, and this will allow us to produce more stuff at a cheaper price, which will ultimately allow the price of things to go down. When you have this type of innovation, when you have this type of competition, it causes the price of things to go down. So Cathie Wood says, we don't need to worry about this high inflation that we have right now. We need to continue investing in innovation and technology, because this will naturally lead to deflation in our economy. Now, she does have a point that when you have economic growth, when you have new technology, when you have new processes, this can cause the price of things to go down. That's how you have a strong economy. You produce more products, you get better at producing, you have a more efficient process, which causes the price of things to go down. But we have also printed an insane amount of money, not just in the last couple of years, but in the last decade and a half. And this money then does cause problems. It does cause pain. I mean, the most expensive kind of money is free money. And so you have to understand the balance here. It's a balancing act. Yes, technology can cause deflation, but printing money hurts the value of the dollar. And this is where the Federal Reserve Bank is now going to be working to fight inflation without hopefully triggering a deep recession. Now, are they going to be able to do that? I don't know. Right now, you can see all signs are leading to a deep recession because the Federal Reserve Bank is continuing to raise interest rates, and we have created a massive bubble in the last couple of years. And the size of the crash is typically in relation to the size of the bubble. And the size of the bubble has gotten very big in the last couple of years especially. And so this is where you don't want to, again, predict what the Fed is doing. You don't want to try to guess that, but instead be prepared for opportunities. So when you see the price of things go down, you know which assets you want to buy. You want to have the ability to purchase assets, because market crashes and recessions create more millionaires than any other time. But it requires you to be financially educated and prepared, meaning you need to know what you want to buy, and you need to have access to the capital, the cash, the money to be able to buy these assets on sale. And then you got to be able to hold on to them for the long term, because it is going to be a bumpy ride to get out of this economic situation that we're in right now. Because not only are we facing an economic slowdown, but we're also facing high inflation. For the last number of crashes that we had an economic slowdown without inflation, which meant the Federal Reserve Bank could create inflation. The Federal Reserve Bank could cut interest rates. They could do quantitative easing. They could stimulate the economy to get the economy moving again. However, it's not so easy this time. We're seeing an economic slowdown with high inflation. So if the Fed were to start stimulating again, yeah, maybe they can get the economy booming, but inflation would get significantly worse, which would ultimately hurt the economy even more. So this is where you want to pay attention to what's happening. We'll keep you posted on market briefs, which is why if you haven't joined yet, make sure you do that. I got the link for you down in the description below. You got to find something that's actually scalable that will allow you to scale your income to the potential that you want. And maybe that won't be in your job. Maybe you have to do something outside of a job, or maybe you're going to have to do something a little bit different. Maybe you have to go take on a commissioned salesperson role. Maybe you have to go and become a marketer. You might have to do something different to supplement the income that you have